All right, guys, back at it again. We're going to do another trade breakdown for the trade I took this morning on the ES. Today was Monday, the 21st of October. And again, as a reminder, if you want to trade live with me and also access some of the resources in terms of my education library, check out my Discord and my YouTube for more content just like this. Okay, let's hop right into this chart on the daily on ES, which was the trade asset we traded, and take a look at what happened. So as you can see, we had a sweep of this liquidity last week. So we can see that we had an SMT divergence at this high last week, which was on Thursday, and then Friday traded back up into the range. Now, after I saw this run on liquidity last week, followed by a candle closure back into the range, and seeing this double bottom here on the daily chart, I had a bearish bias for Friday and also subsequently for today. So what I did today was I marked out both the previous day high, let's mark that out, and the previous day low. Okay, and I wanted to see if we could engage the previous day high and then revert back to the range, targeting the previous day low, and potentially even this double bottom on the daily. That was kind of the optimal setup I was looking for on the ES. I was short biased based on this daily candle closure last week, the weekly imbalance we had created, this buy-side imbalance, sell-side inefficiency, and of course this daily double bottom. So that was my draw on liquidity. So if we actually look at the NASDAQ chart, what we're going to see is that today, right, Monday, we came in and we actually formed an SMT with that previous day high. So that means NASDAQ swept out that previous day high when the ES failed to. And if we go to lower time frames, we can actually see how the trade idea developed from that sweep. So here we had our previous day high and our previous day low. We saw NASDAQ rally, right, at the open and take out that previous day high, forming an SMT divergence right in here. So we'll mark that out. SMT with NQ. Right? And once we had this SMT divergence with NASDAQ at the previous day high, my eye drew into the previous day low, and then of course Thursday's low as well, which was a prominent sell-side liquidity in the market. So it's just H4 sell-side liquidity. That SMT, as you can see, formed right in the New York session, right, this morning at around 10 a.m., 10:15 a.m., and it occurred inside of this higher time frame sell-side imbalance, buy-side inefficiency on the ES. This is our H4 CIVI. So if we just go back to a single chart view, this is kind of the lay of the land that we had this morning, and we were looking for these two areas of price for the ES to draw into with this bearish divergence inside of this gap. So now let's take a look at the lower time frames. So as price rallied up higher in the AM session in the morning, forming that SMT, again, I was waiting for shorts or sell side distribution, wanting to trade back into these key levels down here. As you can see, once price formed this previous day high SMT, we had a change in the state of delivery right here. Right? What is a change in the state of delivery? A change in the state of delivery is defined by the consecutive series of up-close candles that lead to a liquidation of a key level with SMT. So once we shifted delivery state lower, here now I was interested only in sell-side objectives, being the session low as the minor by our sell-side liquidity, and then of course the levels we had marked out, which were the Asian lows, right? And then previous day low here. So we had the previous day low from Friday and then also Thursday's low as well, were our draws and liquidity. Now, I actually did not enter on this candle closure through the chain of state delivery. What I instead waited was for extra confirmation, and I waited for this inversion fair value gap in the market to print. So I waited for one more 5-minute candle, at which point I entered the market short at the open of that next candle, risking the high of what I assumed to be this breakaway gap. Okay, so this would be a breakaway gap. Right, and then my target was indeed, right, the liquidity of previous day low. So this is a 2.5-hour trade roughly, right? And you can see that price immediately sold off, reaccumulated slightly, and then sold off again all the way down into Thursday's low actually, which I didn't hold contracts for. I simply took all my contracts off of that previous day low. So as you can see, the formula here is very similar to other days, right? if we look back and we do a top-down analysis, we had this 4-hour internal range of liquidity, right? With a bearish daily bias that we traded into, forming this previous day high SMT. Then we had this 5-minute change in state of delivery and inversion fair value gap. And alternatively, we also had this 15-minute change in state of delivery level right here, which could have been used for a standard time frame alignment to also short the market for 2R, right? Where you would cover, again, this high, and you would be targeting these lows, right, for roughly 2R. Now, I wanted to get involved a bit earlier, so I used a 5-minute time frame alignment and waited for that inversion fair value gap to print in the market. Then, of course, off the lows, you can see we formed a divergence at this previous day low with the NASDAQ. So price came in below previous day low on the ES and failed to trade into previous day low on the NASDAQ, forming another SMT, and then price came back into the range. And of course, there was a nice long setup in here as well, as you can see from that hourly swing point down here, right, or even a 4-hour swing point down here. You can see we are inside this fair value gap still, and then price displaces back to the upside. And a nice entry would have been potentially, right, using this change in state of delivery or even looking at this inversion fair value gap. I, however, did not take longs. I only traded the shorts, right? However, many of my students today actually took the longs on NASDAQ, not on the ES, off of this SMT divergence. So I can quickly outline the trade that they took to show you kind of what that looks like. So seeing this SMT divergence in the market, several of my students had a bullish bias for the NASDAQ today. And what they did was they longed this change in state of delivery area right here, right? That's the smart money reversal, and the low risk buy is right here. So here is our smart money reversal, again, contained with this SMT divergence at the lows, right? Followed by a change in state of delivery or displacement back into the range. So here's our smart money reversal. Here's our low risk buy. Then you can see price continues to displace up higher. We have this imbalance in here, which is going to be a 15-minute imbalance. Price comes in, formed an SMT with the ES, which we can pull up right here. Right, we formed an SMT divergence inside of this imbalance right here. And then price expanded once again higher, right? And then again, there was another reaccumulation of price. We come back into this order block, and then price at the end of the day expands once again. So several of my students actually did indeed trade the buy model out of this previous day low SMT, utilizing these two areas as reaccumulations and looking for the SMT divergences inside of these accumulation areas to go long in the market, right, for a 2-phase reaccumulation and delivery back into the AM session premium, almost taking out again that AM session high. Okay, so that was the trade I took today on the ES. I'll attach with this video my executions, which I believe I posted on Twitter earlier. And if you guys like these videos, give it a like and ask me any questions you have in the comments. I'll continue to do the breakdowns as long as they're helpful for you. Okay, take it easy, guys. See you tomorrow. Bye.